Welcome to the Explainer. Let's break down what just happened on Wall Street for Monday, November 24th. The markets absolutely ripped higher, but the real story here isn't just the numbers. It's the one single comment that lit the fuse and what it means for all of us heading into the end of the year. All right, so the market kicked off Thanksgiving week not with a quiet start, but with an absolute roar. Seriously, this was one of the most powerful sessions we've seen in weeks, and it started to claw back some pretty serious ground that was lost earlier in the month. And the undisputed star of the show? The tech-heavy Nasdaq. It just soared an incredible 2.7%. Now, that's not just a small bump. That is a statement. And it was all driven by a major rebound in those big tech stocks that have been feeling the pressure. But this optimism wasn't just stuck in Silicon Valley. Oh no, it spread right across the entire market. The broader S&P 500 jumped a really solid 1.5% to close up at 6,712, and the Dow Jones also finished the day firmly in the green. So what was the rocket fuel for this rally, right? What caused all this? Well, it all boils down to one powerful signal coming from, you guessed it, the most important financial institution in the country, the Federal Reserve. This phrase, right here, this is the whole ballgame. When New York Fed President John Williams mentioned there was, and I quote, room for further policy easing, traders heard one thing and one thing only. Interest rate cuts aren't just a fantasy anymore. They might be right around the corner. And here's the proof. Look at the impact of those words. Almost immediately, the odds of a Fed rate cut happening as soon as this December shot up to around 70%. The market is now officially betting big that cheaper money is on the way. Okay, so let's pop the hood and see how this wave of optimism actually played out across the different corners of the market, because it created some very distinct winners and some losers. So while all the major indices were up, you can see the Nasdaq was the clear outperformer for the day. And that year-to-date number? I mean, wow. It tells an even bigger story, up a staggering 19%, which just underscores how dominant tech has been all year long. This chart really puts that gap in perspective, doesn't it? The Nasdaq's gain for the day more than doubled what the more old-school, industrial-focused Dow Jones did. It's a crystal clear sign of where investors were putting their chips. And the engine room for that Nasdaq surge was that elite club of tech giants. You know them, the Magnificent Seven. This is the group with the biggest names in the business, and as a group, they jumped a massive 3.5%. It tells you exactly where the big money was flowing today. Meanwhile, over in the world of commodities, we saw this really fascinating split. On one hand, you had precious metals like gold and silver acting like a classic safe haven bet. But on the other hand, crude oil prices actually fell, sliding about 1.6% because of worries over high U.S. production and a potential supply glut. And hey, the risk-on mood even spilled over into crypto. After a pretty brutal week, digital assets saw a much-needed rebound. Bitcoin climbed back toward $87,000, and Ethereum pushed up towards $2,850. They were basically moving right in lockstep with the gains we saw in tech. But, and this is a big but, while this wave of Fed-fueled optimism was dominating all the headlines, it is absolutely crucial to remember the really complex global backdrop we're in. The risks that have been simmering all year, they haven't just disappeared. Think about it. Persistent trade barriers with China, growing rivalries over resources up in the Arctic, fragile ceasefires in the Middle East, and of course, the ongoing war in Ukraine. These are just a few of the hotspots that create this underlying volatility. The market might have ignored them today, but any one of these issues could change the whole story in an instant. So what does this all mean as we head toward the finish line for the year? Is this rally actually sustainable, or are there still some major hurdles waiting for us up ahead? It really feels like the market is caught in a classic tug of war. In one corner, you've got this powerful hope that a Fed rate cut will fuel that famous Santa Claus rally into the new year. But in the other corner, you have the very real hurdles of those stretched AI valuations and the constant threat of new trade tariffs. And this right here is the key piece of context we have to keep in mind. As fantastic as Monday's rally was, it wasn't quite enough to pull the major indices into the green for the month. The market is still trying to climb out of the hole it dug for itself earlier in November. Which, of course, leaves us with the essential question for the rest of 2025. We've got this powerful tailwind from the Fed pushing us forward, but we are flying directly into some pretty significant headwinds from geopolitics and valuations.
Which force is ultimately going to win out? Well, that's the story we'll all be watching.